Success consists of getting up just one more time after you fall. Oliver Goldsmith, my friends, each and every day, 10 to 15 minutes. That is all we ask. Let's jump into these charts. I'm coming to you a little early today, about an hour before the market closes. Don't expect any radical changes, but of course you never know. Right now we see stocks and gold are up, bonds and Bitcoin down. Let's jump first into the S&P 500. Looks like we're going to end the week. We see that the S&P 500 is up about 1%, and we have a green spinning top, which of course means indecision. It's the first green spinning top we have seen since the doji back on the week beginning the 2nd of January, which was a type of spinning top. But that next week, we had a little bit of down movement, lots of movement, small candle. So that was a spinning top beginning the 8th of January. So again, we see indecision in the market, thinking it might be a down market. We're almost to average volume here. So we'll see how the next week proceeds. We're still long, but we are very watchful just in case this whole thing starts to crash. Look at the doji representing Thursday and Friday. We had, of course, in the morning on Thursday, giant up movement. In the afternoon, crazy volatility. And then in the morning, we had down movement on Friday and then up movement in the afternoon, according to our Heiken Ashi candlesticks, which again is always different, of course, than the high, low, open, close prices that you get with a regular candlestick. If you don't know what Heiken Ashi candlesticks are all about and why we use them, I'm going to put at the end of today's program in the video, you'll see a link. You will see a link to our latest training. It was a few months ago. It is absolutely some of the best stuff I think we've done on Heiken Ashi candlesticks. And again, I want you to have that concept in your head always when you look at Heiken Ashi candlesticks, so you understand what it is you're seeing and why. It means, of course, average pace, I'm told, in Japanese, and helps you follow it. So we can see we're ending the week below the weekly trend line on the half-day and the 2-day charts. And again, we are cautious. Now, as we look at the NASDAQ 100 tech stocks, we can see a doji, a red doji for the week. And again, we see where things, we had really high volume as things were heading to the most recent top, which occurred in a week with a little bit lower volume. Last week, we saw things, again, a green candle, but not reaching high of the week before. This week, a red doji. And of course, average volume. So we will be paying close attention to what's going on here. We don't want to get, we don't want to get fooled out of this by jumping in too early, because remember, we had high volume with a green candle. Then we had a red doji with high volume. And then, of course, we had 2 more weeks of up movement. So we are watching, we're waiting, we're still long on the NASDAQ 100, but we are watchful. 1.09% right now. What's up with bonds? Well, bonds are again trundling down. Had some big down movement starting on Monday, the 1st of April. We saw things move down until Wednesday afternoon when they sort of hit that, and then moved up Thursday, and then down again this Friday, 1.10% right now. We're below the trend line. Again, we haven't had any volume until now to help us see which way things were going to settle out. But we do now see average volume with a nice red down candle. And as you backtrack through here, you see where things popped up with super high volume. Well, I wouldn't say super high, but higher than average volume on the week ending the 29th of January. Then we had nothing doing much of anything for us until this week, when we finally had volume get up to average, and it's going down. So those of you who, again, want to experiment, want to, again, follow trades and trends, you might look at what would happen if you got into a down move on the NASDAQ 100 after high volume, peak volume, and a recent high, followed by many weeks of not sorting itself out, and now you see up to average volume as we end this week. Would that be a potential? What would you learn from that practice trade if you followed it through? Is it going to be something that's actually going to work and give you any idea as to the nuances of trading the 20-year U.S. government bonds? So again, something you could look at and consider. Now, let's take a look at gold. What is up with gold, man? Gold is pounding up again, 1.68% right now. Look how high gold has gone this week, all the way up to $215.74. When we look at the high of last week of $206.05, the week before $203, $202, going back to where things turned around in gold and started heading up. The high was 189 back on the week beginning the 20th of February. Gold has just continued to go up, up, up. And of course, we told you how we were following the gold miners because, again, as we looked at things, we saw a pattern that is hard to beat. We saw higher than average volume with a spinning top hitting your interim low, and then spinning around the next week and pounding up with higher than average volume on the green candle. Again, I prefer to have a down move where you've got a solid candle, not a spinning top that hits your down and then the spinning top to set it off. But this one actually did work out quite well. And again, we told you to look at gold miners. It was hard to find a pattern that was workable on gold because even though, you know, we had a red down candle, it was just not even quite average volume. And then it took it a while to build and grow. It was a lot easier to see that trade, as we told you, on GDX, the gold miners, than it was on gold itself. And of course, both have been knocking it out of the park. Now, lastly, we'll go to Bitcoin, pulling back today, 1.01% right now. 24-hour Bitcoin down 1.04%. But as we look at things as the week ends, of course, we had Bitcoin bounding up that week beginning the 11th of March to its highest of highs. Then we had a doji. Then we have a bit of an up week, but not getting anywhere, not getting up to the prior high. And then this week, not a doji, a spinning top, but of course, we don't really even have much of a trend line to even try to draw. We could draw a really flat one here. I don't even know what to tell you, except Bitcoin pulling back on Friday. We're below the weekly trend line on the 2-day and below on the half-day, have been for many days. So we'll continue to keep an eye on Bitcoin. What I've been hoping for is some red down candles that would allow us to reset and then get ready for Bitcoin when at some point it turns back up. Because right now jumping in would be extremely dangerous if you didn't jump in on the ride up. Jumping in late on Bitcoin can cut your throat. That is where we are, folks. Always love to hear from you. CW@chartingwealth.com. Let us hear from you. God bless. All the best from the whole team at Charting Wealth World Headquarters.